Hi, this is Buy Point ASX. I'm Mac. I'm in Oz. Tonight we're looking at Woodside Energy, WDS on the ASX. As some of you might know, it's been in some tough times. So here is the unadorned chart. You can see that the company has a long history, having been listed in 1995. And since that time, it hasn't been the case of a constant up and to the right path. However, it is a very major stock in the portfolios of average Australian investors. So it's something that is important for us to understand. As usual, I've had ChatGPT prepare a 10-minute analysis script of the same subject. The idea of this is that if you're interested in what the kind of conventional commentary you might get on Woodside would consist of, ChatGPT has compiled what I suppose you might call an opinion on the basis of the conventional analysis readily available on the web. If you are interested, simply pause the video as we go through and you can read the cookie cutter analysis that I use as a contrast to my own insights. Okay, so here is the Woodside chart with the first layer of analysis on it. You can see that Woodside, as I said, does not have the kind of consistent up and to the right historical path that I am beginning to see as being, pardon the pun, fundamental to stocks that present good opportunities for long-term investment. That being said, as I've already noted, Woodside is one of the biggest companies on the ASX. It is important to millions of Australian investors, so it is important for us to understand what is going on. So here is what I refer to as the modern history of the Woodside chart, starting in 2016. You can see the long-term green trend line cutting across this part of the chart, and you can see that it is on a downward angle. You can see COVID and the company's recovery from COVID, the acceleration it enjoyed whilst there was some concern about international supplies of oil and gas. Of course, that took off, especially after the Russian invasion of Ukraine. But what you can see is that before COVID, we had developed this sawtooth pattern. That immediately continued after COVID, then started again. But at this point, at the beginning of 2004, that pattern broke down. The company has been, or the company's share price has been in decline ever since. The company has moved from about $38 down to below 24. Here's the long-term chart, and what you see here, or what I am trying to represent, is an absence. There is no level of support relevant to the current price point on the WDS chart. The price has really slumped. Does that mean that the people are starting to worry about Woodside? Is there a chance that Woodside might fold? Well, I don't think so, because it is still something like a $40 billion company. The question is, just how bad is it going to get, and is it going to recover to anything like the $35 plus price level, so that all the people who invested in the company on this side of that trend line are not going to necessarily lose their money. Most people, or many people, let's say, who invest in Woodside are long-term income investors because Woodside has made a point of establishing itself as one of the leading dividend stocks on the ASX. Okay, now this is an experiment. It might not mean much to you on the page or on the screen as you see it now, but here are 6 slices of the Woodside chart. You can see that green line cutting across it, and you'll see that helpfully what I've done is chosen incidents that I want to show you where this slice picks up some indicator of the date, so you can go back to the primary chart at your leisure and find these points. This is a representative sample of a recurrent indicator that I'm suggesting that you can use at least for Woodside in order to clearly establish when the decline is over and when we can expect the price, the Woodside stock price, to begin rising again. What all these points show is the price line cutting upwards into the 200-day simple moving average line, which is represented in these charts by the black line. The price line is the blue line, with the 200-day simple moving average line trending up. So to be able to recognize the sign that I'm suggesting that will signal Woodside's return to a rising price, first, here's what it is not. You see here the progressive fall of the Woodside price over the last year, and you see here is the 200-day simple moving average line that from pretty much the 1st of January 2024 right through to the 31st of December 2024 and beyond, none of these lines touch the simple moving average line. This is an artificial line that I have drawn on the chart as an indicator. All these lines, the price action line and the 3 other simple moving average lines, the 20-day, the 50-day and the 100-day, don't come anywhere near the 200-day simple moving average. You also see here that the MACD line spends the great majority of its time below the 0 line. So here is the last major decline and recovery in similar circumstances. Obviously COVID's irrelevant here, and what you can see is the clear transition from long-term decline back to growth. You'll see that the point at which this happens with 2020 hindsight is right here. The point that I wanted to make is that this point, the point of change in direction of the price, is not always so clearly obvious as it is in this chart showing a period of some 8 months. What you see also with the MACD line is that once the stock starts moving into growth, then the MACD line starts to spend more time above the 0 line. These are all indicators. They all happen in real time. They're all tracked in real time. You can watch them unfold in real time, but that's not much use if you don't know what you're looking for. And here it is. This is the question. Yeah, sure, the price is going to recover, but exactly when? And this is what I'm saying. This is what you're going to see right here. It's as clear as I can make it. The point is that the blue price line cuts through the 200-day simple moving average line, while the 20-day simple moving average line is moving up. That's why I've included those 6 representative slices, because it's not all so simple. And here's the disclaimer.